All right, good morning, everyone. It is 8:42 in the morning of January 21st, 2021, and this is my pre-market strategy session. Huge down day yesterday, and it was, pretty neat to see. I mean, although it's on the downside, and I know that takes down a lot of value for a lot of people, it sucks. But whenever you get big moves in a day, whether it's to the upside or the downside as a trader, you get to profit from it, yesterday, in the late afternoon there, after about 2 o'clock, just everybody decided to start selling tech in particular. Although both tech and the SPY, the SPY contains a fair amount of tech in it. They both just started going to the downside big time. And then after hours yesterday, Netflix apparently reported some subscription, subscriber losses, or a miss on new subscriptions or something. That thing is down over $100 a share from its previous close. That is enormous. That is an enormous downturn for Netflix. A 20% move on a $500 stock. I wasn't a part of it. It happened in the after hours, but it was quite the beatdown, to say the least. So, there are a lot of things that are getting into and below their ranges. So these ranges, I haven't updated these ranges since yesterday, so these ranges will probably have changed. But here, we'll take a look. We'll go to the daily here. So the top end of the range on the 10-year was 188, and it hit that and is now pulling back. The SPX, the S&P 500, you can see here, it hit its range yesterday and dipped down below and then closed just above it. The range might be a little bit it's most likely the range is almost certainly a little bit lower than that right now, a little bit lower than 44.83. I'm definitely in this environment. I am not attempting to go long. The high probability trade is to be short. However, as it gets closer to the low end of its range, the less likely I am to short it. I will wait for a bounce before it starts to look attractive to me again. And the risk range will change, so I will be looking for the top end of the risk range to start shorting the S&P 500 again. Same thing, NASDAQ. Actually, NASDAQ is much more attractive. The NASDAQ has just gotten into below the top end of its range. You can see here, the top end of the range here, it changes daily, but I think at the highest point it was close to 16,000 or so. And this thing really showed a lot of strength, even as rates started to increase, and even as the signals of going into a slowdown in the economy and so forth, it really continued to show a lot of strength here. But now it's definitely breaking down, and it's only just now gotten into the top end of its risk range there, break down below the risk range, and so the NASDAQ really has a lot further to go. It's possible. I would, again, though, after such big moves down, I mean, here we have in the past, let's see, 1, 2, 3, 4, we call it roughly almost 3 weeks here. We've had a 10% correction in prices. So the sellers are probably going to get exhausted. The market, it just, there's going to be a point in time where there just aren't any sellers left. Everybody who has taken profits or is protecting and so forth have just, they're not selling shares anymore, and instead people are going to start buying protection in the form of puts, or they're going to start hedging instead of using the equity itself. So, the high probability trade, though, is short on the NASDAQ. Russell, same thing. Look at that. This thing is taking an enormous beat down. This thing's taking a 18% takedown from its peak in November. It's really too bad. I can't stand small caps, but I will, of course, on occasion play them, of course, for a trade. but I very, very rarely look to invest in a small cap portfolio. And I did this go round, and I spent this amount of time from about last September, I'd say August, right in here. I spent this amount of time right here averaging into a small cap portfolio. And, and so throughout this time during, the ups and the downs, I was averaging into a small cap portfolio and had it pretty much finished right here, pardon me, in October. And then I was like, okay, and then it ran up, and I was expecting a duration, a significant duration for this move. And it started to go from here to here. It made about a 10% move. I was like, okay, this is working out. This will be all right. But the damn thing just rolled over, big time, rolled over, and I wound up letting it go for a small loss. I mean, I averaged into the small caps in this area right here. I let go of them as it started to go negative again, and the sentiment, the data started coming in negative. And so it's a bummer that, 2021 was an incredible year for my portfolio. And it would have been outstanding, incredibly outstanding, if the small caps hadn't just decided to peak here and revert. But, that's the way it goes. I love, this is a personal bias, but I love to short small caps. I hate small caps, investing. I don't know how many times I've invested in a small cap and it's either not made money or is broken even at best, so my track record with small caps and small cap portfolios is miserable. There's some people that can, as far as an investment stance goes, with respect to trading, it's really good, but that's trading. That's not the same thing as investing. And so as far as long-term swing trade goes, the Russell is looking like trash, complete trash, which for the most part it is. Most of the small caps that are in the Russell are trash. So tech and small caps, I will be looking for opportunities to short. Not yet. I'm going to wait for a bounce here on the Russell and tech before I go to short again. But there's a lot more downside left in this thing. The VIX is elevated here, definitely really elevated. And you can see here it's bumped into the support and resistance line here. We'll see what happens. I would expect there to be some pullback here, but if the accelerating just goes nuts, if the selling really starts to just compound on itself, then the VIX could be headed significantly higher. And it looks to me like this is now trending to the higher levels on the VIX. Have just now, for the first time, put in a higher low right here. I'm going to get rid of this one. And so the VIX might be trending up, and this could be a sustained uptrend on the VIX. So yeah, that means generally speaking, things are going to be bearish on the market. Then what else here? Let's see, Amazon. Oh, Amazon really took a shellacking yesterday. I let go of my Amazon trade way too early yesterday. I was looking for a break. I was looking for a break of 3,100. 3,107 was the risk range, but usually if it's going to go to 3,107, it's going to go to 3,100. And so yesterday, let's get rid of some of these horizontal lines here. Get rid of that one. Yeah, get rid of that one. So yesterday, as it broke below its previous close there at 31.25, I went ahead and got into a short position on it and wrote it down to 3,100. But if I had held on to those, I traded options on it. I traded 5 options on it. Expiration of next week, I think it's 26th, something like that. And so I managed to get a bulk of this move between 31.25 and 3,100. And then let it go. I was like, okay, I'm going to take profit. However, if I just held on to it, good golly, this thing went down over 100, almost another, it was 80 points right there, which would have been an enormous successful trade yesterday. But I have my defined strategy, I have my entry, my exit, profit target, and that's the way it goes. So, oh well. Tesla's getting down here close to its support level. Again, I would look to go short again on this after it reaches the top end of its risk range again. I mean, everything's turning bearish. Oil, I'm still bullish oil. This commodity, oil and coffee, these two things just aren't giving up the trend. They're just, everything else is taking a dive, and oil and coffee just are hanging in there. So what I like about oil is that it's in the gap. There's this gap that was formed back here. Let's see, on the 6th of March 2020 to the 9th of March 2020, and it gapped down, USO gapped down enormously. So this stock, this chart, it looks to me like it's going to repair. Amazing. I mean, with all the downturns, all the pressure on commodities and everything, U.S. oil is just still, headed higher. I don't know if that's because of the possibility, there's some war drums beating. There's some pretty obnoxious stuff happening in the world right now that might be causing oil to catch a bid on, sort of the possibility of it becoming a scarcity. When there's military conflict, oil scarcity happens really quickly. If there's war that breaks out, I'd expect this thing to blast through, the 68.80 level, the bottom end of the gap. But for the time being, I would just kind of expect it to hit the top of the gap and then just reverse. So I'm waiting for 68.60 on USO before I'm comfortable with shorting it. And that'll get us deeper into this current economic situation. If it takes, say, another, maybe month to month and a half to get to the 68.80 level, that'll put us deeper into an economic slowdown, which will be much more bearish for oil. And the next thing, actually, I thought I put I put coffee on the risk ranges here. I could have sworn I did. Oh yeah, here it is, Joe, right there. So here's coffee. Look at this thing. And again, all the commodities, like if you were to look at all the softs, aside from, gold isn't a commodity, gold's a currency. But like natural gas, name the commodity, even lumber for that matter, is starting to come back down. Cotton, sugar, it's all bearish, but not coffee and not oil. Funny, huh? All right. So yeah, other than that though, I mean, there's not much that I'm seeing on the scanners today as far as a bullish setup goes. We've got BSF here, BSFC, sorry. And the only news that I can find on it is that it's gapping up in the morning. That it's gapped up 180%, which is really weird. When something gaps up 180%, I expect to see some news on it somewhere, but I can't find any headlines on it. Of course, here on TradingView, I don't know why it brought up headlines for Joe. For coffee, there we go. I mean, it has news from December 14th. Top pre-market gainers. Okay, here we go. And the company agreed to acquire. Yeah, this is from news in December. So yeah, I don't. It just doesn't do anything for me. It's like, yeah, okay, it made the acquisition back here in December and decided not to move, but now today suddenly it decides to go nuts and move. This looks like shenanigans to me. And I'd expect, much like what happened yesterday. So let's see what yesterday's, what were my stock pick, or not picks, but what were the, it's so funny, I can't even remember them from like day to day. Here, let's, let me find them here real quick. 20, yeah, let's see. Oh yeah, I didn't even put any small caps up yesterday. Okay, let's use SBEV as an example. So this thing got, and actually this is a really good example. So this thing got bid up in the pre-market. SBEV got bid up in the pre-market. This is on the 19th. And then it opens. It opens at basically $5, goes to a high of about $5.10, and then just basically spins the rest of the day meandering downward. And then same thing, SBEV. Now, SBEV didn't make any kind of an acquisition or anything, but this is just the way small caps are going right now. I mean, they're just not performing. They're not giving the momentum trades at all that they used to, like say 2 years ago. I mean, prior to 2 years ago, it was too easy. And I think that's why things have been clamped down on now. It was just too easy to make money trading small caps, small cap momentum. And so now it just that those opportunities don't exist anymore, really. Okay, everybody, that's my pre-market strategy session. Sorry, there really isn't much more. I mean, Peloton is up this morning, but I think that's just sort of like a relief rally. The sellers have kind of worn themselves out for the day, past couple of days. But yes, Peloton actually went. Let's pull this up on the daily here. I've got a lot of levels on Peloton. Let me get rid of all that stuff. I don't even remember putting that stuff on there. Yeah, but Peloton in the height of the lockdown trade was at 170 or so a share. Now it's at 24, 22. Opened yesterday at 31, finished at 24. It's on the scanner this morning. 1.69 million shares traded pre-market with a gap up of 4.2%. But I'm not interested. That's what I would consider a dead cat bounce. A little relief rally. The shorts, maybe they're covering. If anybody's shorting this, there'll be a short cover. But I don't think that this thing's going to go back anywhere near to even its previous day's high at all. Not oversold at all. I actually, what is that? There was UL. UL definitely got oversold. Yeah, Unilever. I wonder how it's doing. Well, it took a beat down yesterday too. Just everything. Unilever got way oversold on January 18th. I didn't wind up playing this one. I didn't pay any attention to it. I was looking at something else. I've forgotten what I was trading on the 19th. But yeah, definitely got way oversold on, really, stupid news. Now, this is an outside reversal, so, it opened higher than the previous day's open and closed lower than the previous day's close. That's considered an outside reversal. So even though it's up pre-market by almost 1%, I wouldn't expect much performance out of Unilever at the moment. But this thing definitely down here at $46 a share, definitely very oversold. There's no reason for this thing to take such a hit, but it did. So I think that down here in the mid 40s is an excellent place to have entered into a position on Unilever. It'll probably give another chance here pretty soon. And in fact, actually, let's see. Yeah, this thing's doing revenues. Low profit margin, 57 billion in revenues in 2020, 58 billion in 19, 60 billion in 2018. Good, solid company, similar to what you'd expect out of a utility or a consumer staple. It's Unilever. So the likelihood that this thing will give buying opportunities in the near future, I mean, within the next 6 months, are highly likely. I think there are going to be a lot of buying opportunities. And we'll have to see how long the economic sort of, I don't know if you would call it turmoil, but it's just a slowdown. GDP is still growing. It's just not growing at as high of a percentage rate. Inflation is still growing. It's just not growing in as high of a rate, thank goodness. So it's not like, this is all doom and gloom. There's complete collapse. As of right now, there's no call for complete collapse. If the Fed makes a mistake, which it is inevitable, there'll be more pressure on the market. But for right now, things are okay. Things are okay. There are some storm clouds on the horizon, but exactly how bad it is really depends on the Fed. And I don't think the Fed will make that big of a mistake. I don't think that they'll actually raise too much going into a slowdown. But we'll see. They might screw it up. So yeah, Netflix, SPY, Peloton, UL. That's everything as far as what I trade. Crypto, Bitcoin. Yep, here's Bitcoin. Yeah, 42,000 was the magic number on Bitcoin, and closed below it. Definitely confirmation. Bitcoin has got further to go to the downside. You know, how far down it goes. Well, as of right now, the support and resistance line, if it went down to visit it today, would be in the mid 32s. So somewhere around 32,500 to 32,900. If it goes down today, that far down, that's where the first level of support is. If it can't hold that, then it's got a much further downside in front of it. I think Bitcoin's here to stay. I don't get it. I don't understand it. But a lot of people are just, there are Bitcoin crazy people out there. There are people who just love Bitcoin. So, you know, if it gets low enough, you know, there should be some buyers down here, you know, in the high 20s to mid 30s if it gets down that far. If it starts closing below the support and resistance line, I'd be looking for 20,000 for the next level of support, that would be crazy. All right. Good luck out there, everybody. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you on Monday morning's strategy session. I am out.